The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the June 6th wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find a gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. And if you can't dial in, we've made it easy for you. We let your fingers do the walking. You can send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question. It'll appear, or should appear, in my cell phone. I'll go ahead and pick up that email message, get your request, and we'll review whatever it is that you are asking for. Of course, inside that Tiger's Den, well, any ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow up 232 points, 25,032 is the print. That's almost 1 full percentage point. S&P up 0.5%. That's 12 points to the upside. NASDAQ up 13 points. So only 0.2% to the upside. Russell up 470. Semis have turned slightly green. Trannies back 30 points. Spot volatility index out at $12. Gold is flat. Silver is up 17 pennies. Light sweet crude back 70 cents. Leading the charge, the upside. It is the energized Tesla up $22 or 7.5%. BlackRock's up 17.80, 3%. Madrigal Pharmaceuticals up nearly 5% or 13 plus. Buckaroonies, Mercado Libre up nearly 10. Signet Jewelers up nearly 10. Boeing up nearly 10. To the downside, it is YY Inc. off $11 or 9%. Ambarella down nearly $7 or 14%. Google off 6. Auto Home down 5, so it's about 4% to the downside. So certainly we can look at those or some of those, but of course I want to look at what you want to look at. And speaking of that, our first request came in yesterday, and somehow I did not see it. And that was from Tamar. And what Tamar wanted to look at was Foot Locker. So let's go do that for tomorrow. Now, the email came yesterday. I believe, if I recall correctly, that what Tamar is looking to do is to short Foot Locker for the next 2 to 4 weeks out there. So Tamar, when I take a look at this daily time frame chart out here, if you're going to short something, and that's fine, what you want to do then is try to identify where is support out here. Now, what I don't want people to do is because they see a gap, say gaps get filled and it's time to go short. No, what I want you to look for is where are the signs of strength. Well, a gap most of the time is a huge sign of strength out here. And in the case of Foot Locker, it is huge, humongous. There were 31 million shares that traded hands on the day of May 25th out here. May 25th. I don't know if it's the top I don't know if it's the bottom. I don't know that the move is over. You're trading above its TAS daily profile. You did that yesterday. That was slightly bearish structured box. So trading above the top of that box, which is 56.28. That is a bullish message out here. And so at this stage, and here, let's take a look at it like this. Because now I'm not saying that, in fact, tomorrow was looking at the gap, but many times people do. And I just don't want you or anyone else to make an assumption that because there's a gap and gaps get filled, it's time to go ahead and fire away to the downside out here. Because what's the difference between a gap and a wide-ranging bar? And that's what you have when you take a look at the weekly time frame chart, because of the day that it opened and where price closed between the Monday open, and so it gapped up in the middle of the week out there. And wide-ranging bars, markets do not end on wide-ranging bars. Means in this case it should go lower. Is there some resistance? Sure. We can come take a look at the wide-ranging bar to the downside. Maybe this is what tomorrow's looking at. This would be the May 15th level, and the low is 58.13. We're at 56.52, and we've been up to a high of 58.06 out there. But the volume to the downside was 27 million. The volume to the upside, 46 million. So what we can see here on a weekly time frame chart for Foot Locker tomorrow is this now has a confirmed A to B equals CD to the upside on a weekly time frame. The 1-to-1 would take it to 62.92. The 1-to-1.272 would take it to 69.65. I don't see anything on the chart as we speak that says you should go ahead and take a short. And even if it does pull back, you've got loads of support out here. So it's really hard to say, hey, this would be there must be something better for you to short than Foot Locker. Now, if you're looking for any one thing to say, hey, maybe this thing has run out of steam, is the mere fact that price has made it up to the top of its weekly profile out here. That's at 58.08. I don't think that's good enough based upon the weekly A to B equals CD, the monthly A to B equals CD pattern that has been confirmed, because in January 2018, this got up to a price level of 53.17, 70 million shares, and last month, 92 million shares. I say stay away from Foot Locker. Sorry that I couldn't get to you yesterday, but that's the call as I see it right now. We've got another request that came in as well. Like to get to the request. Obviously, this is from Tim. Tim says, do you think THO has bottom? So we'll take a look at THO. Just want to go ahead and type it in on system number 2, and we'll type it in on system number 1. And so not THOS, THO, which is Thor Industries. So the question, do you think it's bottom, and would this be a good entry for a middle to long-term buy? This is from Tim. So middle to long term, we're going to take a look primarily at the weekly and the monthly time frame charts out here. So Tim, what we can see is Thor right now is on its daily time frame. It's just simply trading inside its daily box, 98.34. You're at 96.38. So is it a good time to enter? No, because it has not broken above a level of resistance. We see a downtrend out here. But take a look at the daily time frame chart. You're trading below the weekly bottom of its box, the monthly bottom of its box out here. So not exactly what you want to see from a TAS market profile standpoint. Also, by the way, if I take a look at the trading session, now I haven't pulled this back far, but May 31st, this moved down with 2.6 million shares. It was testing a swing that had 2.1 million shares. That's just a bit too much volume to the downside. Suggests to me, just on a daily basis, Tim, this price is going to go and test that May 31st level again at some point in time, 89.89. Steve Rhodes with TFNN. We'll be right back, and we'll continue looking at Thor Industries, Inc. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do.
Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we're taking a look at Thor Industries. THO is the ticker symbol. We're doing that for Tim, who's looking for a long-term, intermediate-term type position on this. And one of the things that I know that Tim is looking at, maybe we looked at this, I can't recall, but we can see, and this is making a nice bottoming pattern. Potential bottoming pattern. We can see that price has been moving lower, doing less relative energy. We did get a bearish reversal candle a couple days ago. We're trading above Stevie's red line. At this stage here, you are looking for, this is a trade versus a intermediate term. This says price could bounce up to 103.11. You're at 96.73. It may find resistance there. We've got 98.34 as another area of resistance. The daily structured box is bearish, so I'd go with 98.34 at this stage. The 101 is still in play. That's the bottom of its weekly time frame out here. But when I look at the other time frames, that's what has me concerned. And originally I had the monthly up. I'm going to put that back up on my screen out here. We don't have volumes on this set of charts out here, but I can tell you that last month this volume was pushing into its prior swing points with volume out there. And it looks to me like what price wants to do is get down and test the low of May. This is a monthly chart, May 2017, in the 87.96 level out here. Now, in order for the monthly chart to turn, give you a bullish signal, you'd need to see a close above last month's high. And then you'd have to get over Stevie's red line. Now, that's quite a ways from here because that high was 111.39. But just, Tim, I want to just give you, everything and what it is that you'd be looking for. The weekly time frame, what's interesting about the weekly time frame is what is interesting. If we take a look at counting the waves from the very high out here, we can see price was moving higher, doing less relative energy. Last week was wave number 6. So ideally, what you get out here is wave number 7 next week or the week after. 104.91 is a level that price would have to close above on a weekly basis in order for this to suggest that, okay, the turn was in and it's not going to make wave number 7 out here. I don't like that price close below the Tom DeMark short-term, or not the setup trend resistance level in the 103 area. I don't like that it closed below the candle session on a weekly basis from August 25th, 2017. So at this stage, I'm going to suggest here what you do. You can anticipate more of a bounce, at least 98.34, but that in itself does not signal to me it's a bottom. If you're really hankering to go ahead and get into a long position, then start a long position, make a just a beginning. Make sure your stop is below the low of May 31st out here, because ideally what you're looking for is one more push below that area, and preferably next week or the week after, to set up perhaps wave number 7 along with the other patterns that we looked at. So thanks for writing in. I hope that helps you out. That was THO. That was on Thor. We do have questions that are pouring in. We haven't gotten to the markets here, but this is more important. You take the time to write. I'm going to take the time to answer your question. So you just wanted to follow up on Google. You emailed me a week ago about the possibility of Google hitting 1118 this week with a target of 1170. So let's take a look at Google. I remember the question. But I don't remember what we were looking at, so we're going to go look at the exact same things out here when we take a look at Google, and I'll finish reading the question, which was, with the recent price action, can you let me know your new analytics, including levels of support and shorter-term price targets? So as we take a look at the googly one out here, on a daily time frame, I'm going to switch over because you're above the top of the daily. You've hit the resistance level on the weekly, 1137.77. You're asking a question with regard to support or shorter-term price targets. You've kind of hit your price target from a weekly perspective, but we're going to take a look at some volume metrics, because this is trading into a swing point out here and so forth. And I want to come take a look at, oh my goodness, where did it go? Oh, it must be behind this. Yep, it's behind this. Okay, so let's go take a look at googly one with Steve's other set of tools out here, and see if we can provide you with the levels of support. So support is pretty easy. That's going to be Stevie's red line, 1105.02. I'll give you some others, but 1105.02 is the first level of support. In the case of Google, looks like this may be setting up an A to B equals CD, or already has. The A point was out here March 28th. B point on April 19th. C point looks like probably the low of May the 3rd. So in essence, today it's completing a 1 to 1.272 A to B equals CD, with what could be a bearish reversal candle. I won't know until the end of the day, but if price closes at least halfway into the bar of June 4th, just 2 days ago, then you would have your three-river evening star pattern named after Oda Nobunaga, something like in any event, you know what I'm saying out there. So that being said, this would say it's getting ready to pull back. Pull back to where? This would be pulling back to the 1104.80 something level. That's on Stevie's red line. 1110 is the top of that daily box. We already know we've hit resistance on the weekly level out here. So I think those are really the price targets. It looks like it's getting ready to do some type of retracement out there versus continue higher. Those are the signals out here. If it comes down to Stevie's red line, tags it, it moves higher, then it wants to go and revisit the highs out here. Those would be in the 1186 area. Let's go out to Weatherford. I don't know where Weatherford is, but we're going to find out and speak with Harry. Harry, thanks for calling. Tell me where Weatherford is.
It's just west of Fort Worth in Texas.
Oh, okay, great. Are you a longtime resident of that area?
I've been out here about half my life.
Okay, well, that works. That works for me. I think I've been in Florida for more than half of my life out there. So, so how is the economy in Weatherford?
Oh, it's not too bad. We're growing quite a bit.
Cool. Good. And CBSI, which is CV Sciences Inc. Tell me what you're doing with it and how I can help you. This thing has been on a tear as of the last month or so.
Yeah, I got in at 85 about a month or so ago, and it dipped down to 78, and then it's been going up to the moon here. And I'm looking to get in with some more, but I'm waiting for another pullback. I guess it pulled back today, we can say. but now it's back up again. So I was just looking to see if I get some guidance.
Well, first, you got a nice trade. What is it that got you into got you into CV Sciences, at the 84-cent level? Was it this little breakout that you saw on May 15th, or was it something else that you have been tracking with this specific equity out here?
No, I hadn't been tracking it. Actually, my son talked to me about it, said that he got a tip from somebody. So I looked at it a little bit, and I said, well, we'll just throw a little bit in there and see what happens. So
yeah,
that's what we did.
Well, you could tell your son what happened, as he already knows. It turned into a little bit of magic.
Right.
And so with regard to, is it pulling back today? Yeah. Is that a bearish reversal signal? Could be. Because yesterday's high and low have been exceeded by today's candle session. And there's no question that we can call this stretch. Harry, we're just about to go to a break. Would you be kind enough to hold on, and then we'll finish this up for you? Okay.
Sure.
So we'll go back out to Texas with Harry. We're taking a look at CVSI. Might be the old Eiffel Tower formation, but we'll take a look at that when we get back from this break.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We're taking a look at CVSI, CV Sciences, Inc. It's a marijuana type of equity out here. And Harry on the line is up about 200% or so on this issue. Harry, how often are you up 200% on some of your trades?
Not too often.
So, you know what they say about greed.
Right.
It could kill. This, I don't know enough about this company. I tried looking during the break, see if I could get any kind of information. What you'd have to do is really go to the SEC website, which I'd recommend that you do that for if you'd like to, if you're looking at this as more of a longer term investment. And you can just search by the company or the ticker symbol, and you'll be able to take a look at their 10K. You'll be able to get some financial data, just understand what's going on here. I can tell you from a technical standpoint, you're in at 80 cents. If you're thinking of holding this for the long term, what I would do, and I would do it based on today's candle, which could be is a key reversal at the moment. It won't be if it closes above the open. The open was 240 or 234. But certainly I put this on a 10-minute time frame, and somebody was unloading. And when I say somebody, 10 minutes, in 10 minutes there was 1 million shares that moved to the downside. So somebody was happy to take their 200 or 300% profit as well. I don't know if they're out and they're gone, and neither would you at this stage here. But one thing you could always do is to get back all of your principal. Then you would have free shares inside of CV Sciences, and then you could make decisions along the way. At least give you some time to investigate it, because it sounds like because otherwise on this chart, this must have been a reverse merger. I say that because which means they went ahead and they bought some company that was defunct in order to go public, because if we take a look at the price history of this entity, it says that they were trading at a high of 201 back in 2014. I doubt that that's the case out here, and so this was an easy way for them to be able to get into the public market out there. So I just think it would really need to do a lot more research than what I can share with you, but at least we can take a look at today's activity, which is what had you concerned. And then to answer the question, should you be concerned, I'd say there's definitely sellers in this thing. There's no doubt about that. And maybe you should be one of them too, because you've gotten a nice gift. So you've got a couple options. You take your 200%, or you just simply convince yourself that you want to stay in this thing and maybe just get your principal back. Those are my thoughts. Any questions about that?
No, it sounds good. I really appreciate your input.
Okay. You bet. Thanks so much for listening. Anything else I can do?
Thing?
Yeah, go ahead.
But what about GBTC? You think that's might be on the move again?
GBTC, so Bitcoin. So yeah. Bitcoin, in order to really take a look at Bitcoin, I would be looking at the futures contract versus that ETF, just to try to understand what's going on. So you've asked the question. Let me see if there's anything here in Bitcoin that I can take a look at inside the futures contract. In this case here, I've got the daily time frame up on my chart, but I'm just going to change that to a 2-hour time frame chart. See if there's anything that even the futures contract isn't really liquid enough out here to get me that interested. Let me try the other futures contract, see if there's anything else. No, not really. GBTC. Let me do this, because I really haven't studied it well enough, I think, to give you a good answer. And the data inside the futures contract there's just not enough there just yet for me to really do some of my wizardry technical analysis. I can share this with you. If it has found a bottom, which in essence was your question, and I can see where it may have, what you would expect is $11.19 should hold, meaning no close below it, and then price should maybe make its way up to the $13.99 to the $19.38 level, and that's what I see right now. You really want to see this close above $12.77 for that to occur. So we'll just simply default back to the Bitcoin Investment Trust ETF for our signals and go from there. Okay.
All right, great. Thanks a lot, Steve. Appreciate it.
Yeah, my pleasure. Thanks for calling, and all the way from Texas. Okay, let's see what else we have out here. I know we've got a couple of, I'm sure we've got a couple of questions. We already answered the Google question. Jerry wrote in. Jerry is, let me just find your email, Jerry. Here we go. It says, hi, Steve. I've been holding DSX for some time. So we want to take a look at ticker symbol DSX. And I'm just coming back over here in my system to type that in, populate the screen, and I'll finish reading the question, which is, I see it's finally breaking a rather long-term consolidation to the upside. Heck of a downdraft on April 17th. It's trying to get through. Do you think we can get legs up to the 618 and then 827 level? And that's Jerry in Boston. Well, you don't like, Jerry, you do not like today's candle session so far, because that is one heck of a shooting star out here. So take a look at this second. This is Diana Shipping, and we can say that the consolidation that Jerry was looking at and the breakout that he's looking at, in essence, looks like this. We'll just simply draw that on our screen out here. So here's the top-ish of the consolidation. Here's the bottom-ish of the consolidation. So certainly what Jerry wants to see is price to stay above the top of that level, which in essence is 465, 464. The volumes there were about 1 million and 1.1 million, and it broke through with no conviction yesterday, Jerry. So that's not a good sign. Didn't break the consolidation with conviction, let alone it traded really right up into resistance. And so resistance is going to be this red horizontal line, this gap to the downside. Now, gaps are our friends. The old gaps get filled, all that kind of stuff out there. What they do is they help you to identify support or resistance. Well, what this did here, this equity, Diana Shipping, the gap to the downside is at the 503 level. The volume behind that move was 3.3 million shares. Today you're at 693. So what this really has done, I don't know that this has proven to you yet that this really has broken out, Jer. Can it get up all the way to the highs? You were referring to the $6 level out here, the highs from April, of course. Could this make a measured move that is equal to the consolidation break? It could. If it's going to, it needs to clear the resistance level that it just traded into. I would have to say the target really becomes, the 570, the $6-ish area. Let me pull this back. Let me go to a longer-term time frame chart for Diana Shipping. Maybe we've got some other message out here. And the other message is 618 is resistance. Let me try my other time frame chart, see what we see here. Well, this is not good. This is not good today, Jerry. What I mean by that is if I just take a look at today's move, price is moving higher, doing less relative energy, hence that black diagonal line that I see in my screen automatically generates. And today could be, it's really two candles. You've gapped to the upside and you've got a shooting star. So which one is it? Is it the bullish message or the bearish message? I know you're asking me. I'm just talking out loud. I don't know. If you're in the stock, which it sounds like you are, right, for a long time, just don't let it close below 457. If it does that, you're coming down further, 410 or so. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back. Dow up 227, S&P up 12. So let's go take a look at the general markets, try to get a feel for what they're doing, or at least what to be looking for. And we'll switch over and take a look at this set of 4 different panels. We've got the daily equity futures contracts out here for the ES Mini. That's the left panel. You can see that has completed a 1-to-1 A to B equals CD. 2757 was the number. We're trading at 2761. The next number to the upside is the 2803 level. Inside of the NASDAQ out here, this thing is made it all the way back to its highs. Didn't exactly test it just yet, 72.1450, but close enough to have made a 100% move of a move. Doesn't tell us whether or not price is going to take that level out. This certainly is not a bearish reversal signal as we speak just yet, not inside of the NQ, not on a daily basis. If anything, it's just a doji candle, just meaning it's tired out here. That's all. So no signal. And if we take a look at the Dow, that has had the largest movement. Maybe the largest message is really coming from the Dow, because this thing is right now trading above the top of its box out there. Several days ago, it was like, how is it that the Dow is going to make up all of its gains, so to speak, to get up into the top of that TAS market profile, and it's done that and some. And by the way, closing above the top of the box, does it mean anything? The answer is yes. If you just simply take a look at this chart here, the daily time frame chart for the TAS market profiles for the Dow equity futures contract, what we're going to see is that price was not able to close above the top of any box. Those are the red horizontal lines, not until the trading session I'm referring to a close on May 9th out there. That was a bearish structured box. It was tested and rejected a couple of times, May 7th, May 8th. Once you close above a bearish structured box, nothing more bullish than a bearish than a failed bearish pattern. That's what this was. Price moves higher. Brand new set of profiles forms. Price comes down, test a bullish structured box. Now, this is a bullish structured box. Just test that center line, which was not near the center, but the point of control where both bulls and bears are comfortable with price. That level held 24,221, and now we're back above the top of a box. End of day, what does this look like? And then tomorrow. Because whenever you get a signal, you like to see some type of follow through. You don't want a one-hit wonder out here. And I don't know the answer, but if in fact the Dow closed above 24,971, and you have some additional follow through to the upside, then you've got all kinds of A to B equals CD patterns, volume or not. It is summertime. Just go with the assumption everything is going to be on light volume, and it just may not matter. And the reason it may not matter is because these markets are breaking out, not the Dow just yet, but in worldwide currencies out there. Because the Dow priced in euros looks a whole lot different than this chart. It looks like it's about to have a breakout party. And so money is starting to fill into the so-called trophy horse. I know we're having a horse race. This is a horse race out here. And the trophy, the Triple Crown is owning the Dow. If you're large cap money overseas, even here in the U.S. out here, so you want to be paying attention to it. And we cannot think of the Dow or anything just inside of U.S. dollars because that's just the way that it shows up on our charts. If we do that, you might as well tie both of your hands behind your back out there. And I don't want you to do that. So the key, though, is this 24,971 level. Maybe it's resistance. I don't know. We're trading above it now. Trading above it again tomorrow, then you've got breakouts going on all over the place. You certainly have it inside the ES Mini. It closed above the top of its box 2 days ago. And you had follow through yesterday, continued follow through today. The Russell 2000 is just on a tear. At some point in time, there's going to be some type of retracement. It's just not in the cards just yet. That's what I see when I take a look at the daily equity futures contracts. If I go take a look at what's going on inside of the summation index out here, we take a look at the New York Stock Exchange. That's the left-hand panel. Advanced decline line, okay. Nothing to write home about. It's printing out at 94 and change out here. The question is, can it get to the plus 150 level? We take a look at the NASDAQ composite. It is above, not the NQ, but the composite itself is above its all-time high of 76.37.27. A failure there would say you've got to close underneath that. So if you don't close underneath that, volume or not, it doesn't matter. Price will have broken out above resistance. Old resistance will become new support until proven otherwise. In the case of the Dow as well, is that's where I'm back to. The next level I'd be looking at is the actual high. This is a daily chart, but the May highs out here. And the actual high comes in at 25,086.49 or 25,024.73. If you see the Dow close above the May highs out there, that's another important message. Important enough to say, you know what? Maybe the consolidation is over. The proof in the pudding would be what's the Dow doing in terms of yen, in pounds, and in euros out there. And that would just kind of be the icing on the cake to let us know what? Let us know if the Dow is getting ready to go back to the top of its consolidation, which basically is the highs from January 26. So we know what to be looking for. We don't have all of the signals in just yet, but we just take them one at a time. And today's one at a time so far, the top of its daily profile in the equity futures contract. Next up on the list is going to be the high from May 21st, 25,086.49. We'll just simply take these things one moment at a time. If we take a look at the S&P 500, well, the S&P 500, that's over its May highs out here. This is just simply telling you that this wants to trade back into the March 13th level out here. Could be anywhere from 27.58 to 28.01. But that's what, and maybe we're already trading in, well, 27, we're trading at 27.61. So here's the deal. You're already inside a swing point. If this closes above 27.58.68, volume or not, says you can go test the top of that swing point out there. So I would be watching that as well. What else can we go look at? I don't know what else to really look at out here. Signal-wise, let me just kind of flip through these pages, see if there's anything, see if there's anything really worth noting. Bullish or bearish out here. So it doesn't matter to me. It's just what are the charts telling us. Oh, I know. We can go take a look at. There was a question last Friday. If I'd looked at the Dow 30 stocks, which I had not, so we can do that for sure with time. Although I think we're only going to have 2 minutes in about a minute, so maybe not. Let me see what the high yield interest funds are doing. Not doing a ton. I will tell you, this is by the bottom chart here is a global high income fund, one of the ETFs out there that I like to track. And you like to see that the ideal conditions, markets wanting to move higher, funds flowing everywhere, is to see the high yield income attracting funds as well. This would be moving higher. It's just consolidating out there. Not the best of messages, not the worst. It hasn't turning down, so we don't have a like divergent signal or pattern out there. But and let me see, what else can I look at that's out here for you that's worthwhile to go take a look at for you? Indexes, what do I want? The Dow. I think I've kind of covered it. Although, if I look here you can kind of see on this chart. You can't kind of. You see the Dow consolidation in dollars. You see where the Dow is in euros. It is 200 points away from breaking out. And in pounds, 18,670, about the same, 207, 78, 79, so about 250 points from breaking out. That's what's going on with regard to global flow of cash. It's actually coming into the Dow. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So the last question, I'm really kind of paraphrasing here, coming in from the den from Z, inside the den. And Z, I take your question in essence as trying to explore and look for some type of topping signal inside of the NQ out here. And so here is the September contract. This will become active most certainly tomorrow. Everything will roll over into it. So we're taking a look at the same pattern if we take a look at the June contract out here. But on this chart here, I show you what newsletter subscribers get to take advantage of, which are these signals that have really on this time frame chart here have identified since the beginning of the year terrific tops and bottoms. Just terrific tops and bottoms. Do we have one that is showing right? And it's worked so far. I have no reason to believe that it's not going to continue to work out here in order to be able to find those signals. So where are we at right now? No such signal exists inside the NQ. Has price come down and tested a level of support, Stevie's red line? Yes. What do I expect on this time frame out here? At a minimum, I would expect that the highs of today will get taken out and tested, taken out, so to speak. Doesn't mean today. Doesn't mean this afternoon at all. In fact, the more that it doesn't happen this afternoon, the more chances that this pattern that has been present, that have called tops and bottoms before, would actually form. And then you'd see some type of move, some type of exhaustive move, and then we'd be looking at some type of a pullback. But probably the pullback, nothing more, not taking out the prior lows out here from back in, looks like May 29th, because what we have now is we have a series of higher lows and higher highs as we come all the way back to the all-time highs out here. And so, yeah, it's a logical place to be looking at, a short-term type of a short trade. But looks like the old sell in May is gone, and we're more following 1958 than anything else, and that would bode well for the bulls. Folks, thanks so much for the calls. Thanks so much for the emails. Keep those cards and letters coming. But stay tuned. Your favorite polar bear, David White. He's up next. Tom O'Brien, 3 to 5. I'll be back with you on Terrific Thursday. Thanks for being here. Have a great day.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.